Hey everybody, welcome back to Ryan Makes Sense. This is part two of reviewing stocks similar to Tesla before Tesla ran 1000%. We were able to go back into the Internet Archives and we created a scanner based on financial parameters that Tesla had before they ran over 1000%. My last video was part one. This is part two. And the reason I'm breaking it up is because we can only get about 2, 3, 4 stocks in a video before we get over 30 plus minutes. So we are going to be looking at ticker symbol CLBT, CORT, and DLO. We already looked at Asana, Aspen, and Braze. And if you guys have not seen that video, I recommend 10 out of 10. Go check that video out. Asana looks fantastic. Braze looks incredible. So let's see what we find here. I'm going to go ahead and shrink-a-dink my head for your viewing pleasure after you hit the subscribe button. All right. So we have CLBT here. Of course, we're going to look at what institutions are doing. I do have this set up already. We'll come back here. We're going to go here and type in CLBT. All right. So looking at this chart, it is obviously insane. The stock was just at $3.94, and fast forward a little more than a year, we're at $16.77. Absolutely crazy. RSI is with the bulls, momentum with the bulls, money flows with the bulls, and our relative momentum indicator is also with the bulls. They are not profitable. They have a good quick ratio. We'll have to check out the debt down below. That was 2023 though. Institutions own a bit, insiders own a bit. Gross margins 84%. That's insane. The year 2023 they did 325 million. We're in August of 2024. Our trailing 12 months is 362 million. So there is a good chance that 2024 will produce more than 2023, which is good. Not a big fan of shares outstanding growing, but what can we do? We're going to go ahead and run our proprietary stock price calculation here and see what we get for a potential projected stock price. All right, so the market cap is $3,440,000,000. Income again negative. They're not profitable. 103,330,000. And sales they do 362,490,000. Okay, going on down to the cash and the debt. The cash and the debt. Cash and the debt. Okay, we have one sell here by an officer. Okay. I typically look at the revenues, but we don't have enough data showing for Q1 or Q2 for 2023, unfortunately. All right. Cash, they have 178,590,000. Debt, they have 7,160,000. All right, total assets 556 million, total liabilities 596 million. When liabilities exceed assets, it gets a little hairy. So we'll see. That is a beige flag for me at the moment. However, I mean, they have adequate cash. Gross margins are 84%. Every $100 they spend, they get $184 back. That's crazy. So we're going to go ahead and now finish our calculation here. Shares outstanding 203,230,000. Potential share price of $19.05. Analysts have a target price of $18. And the stock right now is at $16.47. Drinking some water. Okay. So we have a little bit of upside left. However, this is extremely hot. At any point, whether it's in August or September, if and when there's an eventual pullback, it's going to be fantastic because we're going to have a cup and handle. So we have the left side of our cup right here. right side of our cup right here, the pullback. It's just going to be fantastic. This is where we get our price target for our pullback right here. So this was an earlier Fibonacci I drew. Let's say this is our all-time high. Activate. Right there. I think it's going to go higher actually, because maybe. We'll see. I'll just keep it right there for now. So the handle pullback, in my opinion, we have this beautiful channel right here, and I'm going to make it nice and thick so everyone can see. That blue thick channel, if and when there's a pullback, I expect this to come back to potentially 11, 12, 13 bucks. Not because it's a bad company, but because a cup and handle chart pattern is very bullish, and it would allow for a natural breather for this stock to, again, create a new support, consolidate, and start a next move up. So, yeah, this is gorgeous. I would just wait until we get here. So I'm just going to create an alert drawing. Crosses below, yo. So once the price crosses below this, I'll get a text and I can come back to this and just revisit where we're at. So CLBT looks good. We're going to go ahead and move on, but let's check. Let's see what institutions are doing. Institutions own 33%. That is old data. New data shows that they actually own 40%. So a nice 7% increase there. Not bad at all. Again, I think this is just really hot at the moment. It's gone several 100%. A pullback would be absolutely fine. And you can actually see we had left cup here, right cup right here, pullback, boom. So this thing just might continue to go up. So our price target would be about 1150 minus 3, minus $4. So like 6, $7. So we could see this get to 18 or 19 bucks before it does a pullback. So we'll wait on this one. We'll wait. All right, so CLBT, let me know what you guys think about CLBT. Next is CORT Therapeutics. And we're gonna look at the bigger picture here. Biotech company. Ooh, trading right above an ascending wedge. Great strength, looks like it's with the bulls, but coming down. Momentum is really choppy, but it's with the bulls. Money flow, kind of with the bulls. Momentum indicator, it's hot. I mean, this is absolutely fantastic. This is absolutely fantastic. This is even better. So this is, I'm excited about this. Let's start loading our institutional data. Let's check here. Nice. Okay. Let's go back here. All right, so they are profitable. They have a great quick ratio, extremely low debt. EPS and sales over the past 5 years, they're resilient. Institutions are adding. Low float, there is some shorting. Crap. There is some shorting, and FinViz recommends it with a 1, which is rare to see. So let's run my proprietary stock calculation here while it loads. All right. So they have 3,590,000,000 in market cap. Income profitable 124,940,000. Sales 569,610,000. All right, and just looking at 2023, they did 482 million already. For 2024, 596. That's pretty incredible. And their gross margins 98%. That is insane. That is insane. All right, Q1 this year they did 146 million. Q1 last year 105 million. Wow, and they're barely spending any money on their ads or whatnot. Wow. Q2 this year 163 million. Q2 last year 117 million. Insane, 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 insane. So we do see some selling, but we see options washing out. So it's a lot. Okay, so Robert Gary Charles got 13,000 in options, sold 5,000. Gary Maduck 25 for 25, 3,000 for 3,000, 22, 22. You can see they basically cross cancel each other out um, almost to a T. To a T, actually, so far. Pretty dang close to a T. So, yeah, there's no red flags here. Looking at our balance sheet, what do we got? What do we got? What do we got? Whoops. All right. Cash, we do have 473,160,000. And debt, it was very low, 5,620,000. Wow. Total assets, 714 million. Total liabilities, 118. Assets dwarf liabilities 5 to 1 at least, which is crazy. For every one liability, they have 5 assets. That is absolutely fantastic. Going back up here to our potential stock price, we have, come on, come on. What's going on? 103,410,000 shares standing. Potential stock price of 45.95. Analysts have a target of 59. We're at 34. So if our calculation is correct and analysts are correct, institutions currently own 83%. We should see a higher number here. Again, 83% is old number, 91% is our new number, and we are kind of hovering at the levels of all-time highs, which is great. Ingalls and Snyder added 16%. Leonard Baker added 0.5%. Vanguard sold 7%. Renaissance Technology sold 7%. Joseph Belanoff added 8.2%. And BlackRock added 0.37%. Who is Joseph Belanoff? Let's see if he's a founder. A founder-led company with a founder stock purchase? Are you joking me? That's gold. He added 500,000 shares. I like this one a lot. I like this one a whole freaking lot. Let's check here. Wow. Okay. Wow. I mean, so this has just been doing well. You can see the pullbacks are kind of obvious. Every time it gets up here, it pulls back, gets up here, it pulls back, gets up here. We haven't seen a full pullback yet. Just trying to look at some potential levels. Decent chance this gets down to 32. Right now it's at 34. I mean, this has been great. This is trading at the same level as it was in 2023. It looks like, yeah. It looks like the pullbacks are very obvious, but this one, it exceeded pretty well. So, I mean, if this stock comes and closes above $37 to end the month, that's going to be very bullish. Man, this is a good stock. This is a good stock. It just might be in terms of a pattern. But again, if you're investing for, and I'm usually typically a long-term investor, so seeing something like this, it would be something I just add to every year or every month for over a year. So I like this one a lot. Whether I add at 34 or 32, as long as I continue to add throughout the rest of the year, my dollar cost average should give me the best average price throughout the year. Yeah, I think this goes much higher. My target came out to 45.95. Analysts have it at 50, 59. So I like where this is going. Gross margins are insane. This is a pretty fantastic company. yeah, we're gonna have to keep this one on the back burner. So we've done CORT, and now we're moving on to DLO. DLO. Cheers. All right. Oof. Okay. They're profitable. They're a software company. Okay. Trading at all-time lows, essentially. Uh, this is absolutely beautiful. This is absolutely beautiful. For 2023, we see 295 million shares outstanding. We're at 161 million shares here. Gross margins are high, nice. Very low debt, great quick ratio. They're profitable. What am I missing here? What the heck am I missing? We're gonna find out. We'll get there. We'll get there. Okay. Let's run the numbers here. Okay, so the market cap is 2,510,000,000. Good for them. Income, they're profitable 131,230,000. Sales, they do 697,490,000. All right. Going on down. Let's get DLO going here. Really quickly, engages in simplifying and redefining online payments experience. Okay. All right. Looking at Q1 this year, they did 184 million. Last year, 137 million. But to look at what they spent 77 million last year to make 137. They spent 121 to make 184 million. Gross profit is only up 2.86 or 2.85 million because they spent so much money here. That's crazy. Gross margins are going down. That's a sign right there. All right. Cash they have 680 million. Wow, 130,000. Debt, it was pretty low if I remember. Yeah, 3,160,000. Okay. Total assets 1.1 billion, total liabilities 679 million. So assets dwarf liabilities almost 2 to 1, not quite. I just want to see. Yeah, liabilities are slowly going up, assets are slowly going up. Cash, this is the most cash they've had ever, so that's good. Well, as far as we can see. Um, Interesting. Okay. All right, back to our stock price calculation. So we're going to take that divided by 161,940,000. Potential stock price of $24. We have an analyst target price of $10. Hey, New Street had it at 24 where I had it, but it's gone down. It's gone down, and I think that reflects with the gross margins going down, gross profit going up slightly, but they also spent almost double on ads or whatever their cost of goods are. So their brand is not sticky, which means maybe customers aren't renewing subscriptions or in adding for the year 2025. So that is a potential concern. But again, we see this company just growing right here. They did 650 million in 2023. So far, 2024, they're at 697 million. So they're on track to do better than they did in 2023. So overall, this is not a bad company. I want to look at the website to kind of get a feel for it. Let's look here. I want to see if we've hit a potential low. 73.43. It should snap. 657. We may have hit the low. And we also could be building out a cup and handle right here. So left side of the cup, building out the cup base, right side of the handle, right side of the cup. So, this is definitely worth throwing some money in my opinion. I'm just gonna write down because I okay. DLocal announces emerging market payments. Okay. So here's all their customers. They processed 17.7 billion worth of payments. Yeah, I mean this is kind of cool. Gaming, let's look at their gaming. This is interesting. All right. Oh, I thought it was like casino gaming, not like people living in their, not living in their basements, but people playing video games. All right. Ah, crack myself up. Okay. So institutions own 16%. However, I mean, that last earnings was gross margins going down. We'll see. But with my target and analyst target, we should see higher than 16%. New data shows that institutions and hedge funds own 80%. That's huge. That's massive. Not the greatest all-time high in terms of institutional holdings. FMR decreased 40%. Vogel. Are these the founders? Let me just double check. If we got founders adding to the stock, that's, yep, Andres and Sergio. There's Sergio. Here's Andres. They added. The founders added. Wow. And they own a ton. And then we've got Emiliano Sebastian Fernandez Belagüe sold 3%. I mean, this is absolutely great. I like this one. I really do like this. At $8, I mean, they do almost a billion. No, they'll be doing almost a billion in 2025, maybe 2026. Their forward priced earnings is 13. Gross margins are 38%. That's high. It is going down though. A lot of people are shorting this stock at the moment, but the founders are adding. So I've got this one noted down. I like this one. So yeah, I like CORT, CORT, and DLO. We're gonna go ahead and look at the rest of these Tesla stocks in the next video, only because it does take, this video's gone on 23 minutes. It takes 23 to like 40 minutes to complete an analysis of a batch of stocks. So if you made it this far, consider subscribing. Thank you so much for watching. Part 3 is coming out tomorrow. Talk to you later.